Hey everyone, welcome back to Corporate Decoder, the place where we unpack the complex world of business filings and see what juicy secrets are hiding in plain sight. This SEC filing we are diving into today is packed with enough corporate jargon to make your head spin. But don't worry, we are going to break down exactly what it means for Skyworks Solutions Incorporated and Qorvo Incorporated and what it means for their future. So what is this all about? Skyworks and Qorvo are planning to get hitched. This is a massive merger that could reshape a big part of the tech industry. We're going to dissect the finer points of their deal, the financial implications and the risks involved, so you know exactly what to expect. And hey, before we jump into the nitty-gritty, if you appreciate getting straight insights from these corporate documents, make sure you're subscribed. We break down these filings so you don't have to. And if you want to dive deeper into our analysis or just chat about stocks, join our Discord community. Linked in the description below. It is a great place to learn and share. Alright, let's get into it. This whole situation revolves around a merger agreement signed back in October 2025. Essentially, Skyworks is buying Qorvo through a two-step process involving a couple of shell companies called Merger Sub I and Merger Sub II. The goal is for Qorvo to become a part of Skyworks. So what do Qorvo shareholders get out of this deal for every share of Qorvo they own? They will receive 960 shares of Skyworks stock plus 32.5. In cash, that's right, a mix of stock and cash. The exchange ratio is fixed, meaning it won't change even if stock prices move around before the deal closes. This is super important because it means the value Qorvo shareholder Elders get depends entirely on Skyworks' stock value on the closing day. Now let's talk numbers. The value of this deal has been fluctuating quite a bit. On the 27th of October 2025, right after the deal was announced, the merger consideration was worth about $105.31 per Qorvo share. Fast forward to December 2025, the last day they could practically check before this report. Skyworks' stock price had dropped, meaning the deal was worth closer to $96.22 per Qorvo share. That's a nearly $10 difference per share for Qorvo shareholders. Depending on when you look, this shows you how much the value can swing based on Skyworks stock performance. Why are Skyworks shareholders being asked to vote on this? The deal requires their approval to issue new shares, and the Skyworks board is strongly recommending they vote yes. They believe this merger will create a powerhouse in the semiconductor industry, combining complementary portfolios and boosting research and development scale. They are expecting significant annual costs. Ving's estimated at $500 million or more, and forecasting a combined company revenue of about $7.7 billion. This merger is expected to make Skyworks even more profitable per share right away. Qorvo's board is also giving a big thumbs up to this deal. They see a lot of benefits too, like joining forces with Skyworks to create a stronger company. They believe this merger offers a substantial premium over Qorvo's stock price before the deal was announced and gives their shareholders a chance to participate in the combined company's future growth. They also mentioned they talked to another potential buyer but decided Skyworks was the better deal for their shareholders. So who will be in charge after the merger? The combined company's board will have 11 directors. 2 of those will be the current CEOs, Philip Brace of Skyworks and Robert Brugworth of Qorvo. The remaining directors will be chosen by both companies, with Skyworks designating 7 and Qorvo designating 3 reasonably acceptable to Skyworks. This is a key point on how they'll manage the new giant company. Now, for the stuff that keeps investors up at night, the biggest risk is that the deal might not actually happen. It depends on getting approvals from regulators, the shareholders of both companies, and other conditions. If the deal falls through, it could hurt both companies financially and strategically, and even if it goes through, there are integration challenges, regulatory hurdles, and the risk that they don't achieve the expected benefits from combining these two big companies. Let's look at the numbers. This filing includes some fancy financial tables called unaudited pro forma condensed combined financial statements. These are like a hypothetical look at what the combined company would have looked like financially if the merger had already happened. For the fiscal year ended October 2025, they project a combined revenue of about $7.7 billion. That might sound like a lot, but look at their costs. Cost of goods sold alone were around $4.9 billion. This means their gross profit was about $2.8 billion. Digging into the balance sheet numbers, as of October 2025, Skyworks had about $3 billion in current assets, while Qorvo had around $2.3 billion. That looks pretty standard. But remember, these are just snapshots, and the actual numbers post-merger could be very different. For the fiscal year ended October 2025, Skyworks reported a net income of $477 million. Qorvo, on the other hand, had a net income of $218 million. However, after combining their numbers and factoring in all the merger adjustments, the pro forma net income for the combined company ends up being a loss of about $35 million for that same period. This Just the merger costs and adjustments are significant. Looking at stock prices, Skyworks stock has bounced around quite a bit. For example, on the 27th of October 2025, it closed at $77.13. While on the 15th of December 2025, it was down to $66.37. This volatility directly impacts the value Qorvo shareholders will receive since the stock portion of the deal is fixed. And for dividends, Skyworks has been paying out dividends averaging about 71 cents per share per quarter. Qorvo, on the other hand, has not paid any dividends in the last 2 years. Who owns the keys to Skyworks? The Vanguard Group holds over 20 million shares. That's about 13.8% of the company. BlackRock is another major player with over 16 million shares, or 11.3% coming in as a big institutional investor, and Zena Investment Management also has a significant stake with over 12 million shares representing 8.2% of the company. And of course, the leadership team holds some share too, but less than 1% in total as of December 2025. When it comes to Qorvo leadership, some directors and executives stand to gain financially from this deal. For example, Robert Brugworth, Qorvo's CEO, and his team have changing control agreements and retention plans that could pay out millions if the merger goes through. This is pretty standard. But it is always important to remember that leadership might have motivations beyond just the average stocko. Elder. Back to the deal itself, the core of this is that Skyworks is acquiring Qorvo by merging its subsidiaries with Qorvo. The exchange ratio is fixed at 0.96 O Skyworks shares plus 32.5. O per Qorvo share. This whole thing is designed to be a tax-free reorganization for federal income tax purposes, which is good for shareholders. Elders, however, it's not a condition of the deal, so there is a slight risk there might be tax implications if the IRS disagrees. Now let's talk about the risks. It's a long list. First, the deal could be delayed or even fall apart for many reasons, including regulatory approvals or if either company shareholders don't vote. Yes, they have termination fees. Skyworks might have to pay Qorvo nearly $300 million. If the deal is terminated under certain conditions, and Qorvo might pay a similar amount to Skyworks. And if the deal doesn't go through, they still have to deal with the costs already spent, which could be substantial. Here is an interesting option for Qorvo shareholders. If you don't like the deal and you follow the rules, you might be able to demand that a court appraise your shares and pay you the fair value instead of the merger consideration. But this is complicated, and the court might decide your shares are worth less than the merger deal, so it's a big gamble. Looking at the stock values, Skyworks common stock has seen some ups and downs lately. For instance, on the 27th of October 2025, it closed at $77.13, but by the 15th of December 2025, it had dropped to $66.37. On the other hand, Qorvo stock has been fairly stable, ranging from about $82 to $116. The fixed exchange ratio means Qorvo shareholders are essentially betting on Skyworks stock performance after the merger. Centerview Partners, the financial advisor for Qorvo, gave them an opinion that the merger consideration is fair from a financial point of view. They looked at various financial models and compared Qorvo to similar companies in the market. They came up with a range of values for Qorvo stock between about $92 and $136. Per S-Hair, the deal value of around $103. Per share falls within this range. Skyworks also got opinions from Catalyst Partners and Goldman Sachs. Both agreed that the merger consideration appears fair from a financial standpoint. To Skyworks, Catalyst estimated a standalone range for Skyworks stock between about $68 and $112 and a pro forma range after the merger between $71 and $126. Goldman Sachs gave similar ranges. Their analyses suggest the deal terms are in a reasonable zone financially, although the actual value will depend on how the market treats the combined company. This is key for the future of the merged company. The board structure is interesting. It will have 11 directors, 7 from Skyworks, 3 from Qorvo. Robert Brugworth, Qorvo's CEO, will join the board, and Philip Brace, Skyworks CEO, will lead the combined company. This seems like a move to balance power and ensure both companies have a voice. Skyworks board is pushing hard for this merger. They believe by combining forces, they can become a global leader in semiconductors, creating significant value for their shareholders. They're counting on about $500 million in cost savings alone and expect the deal to immediately boost their earnings. Per share, it seems like a strategic move to gain market share and drive innovation. Sovereign Gold Company is a well-oiled machine. Sovereign Gold Company is a well-oiled machine. Now, for my take on all this, Skyworks and Qorvo are embarking on a massive merger. This isn't just about buying and selling, it is about integrating two complex businesses. The financial projections are optimistic with big synergy targets, but they come with a lot of risk. The value of the deal for Qorvo shareholders is tied to Skyworks stock, which has been a bit of a roller coaster. Lately, the governance structure shows an attempt at balance, but ultimately Skyworks leadership will be at the helm. The biggest story here is the potential for massive cost savings and market leadership. If They can pull off this integration smoothly if they navigate the regulatory hurdles and successfully merge their operations. This could be a game changer for the semiconductor world. But if not, the risks are significant. Alright, that is our breakdown of this massive deal. What is your take on these numbers and what they signal for the company's futures? Drop your thoughts in the comments if this analysis was valuable hitting. That like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.